So this is a daily time frame chart of IDFC First Bank. This is daily time frame, as you can see here. The reason why I am showing you this chart is because last year, one of my students or one of my subscribers contacted me and he wanted some one-on-one coaching through a Zoom video class. So I accepted him as a student. And while we were discussing, he spoke to me about his some of the stocks he had bought earlier before contacting me, and how he's been losing money on those stocks. So it's kind of a story, but he disclosed what stock he had bought. So I just wanted to show you what mistake he made when buying this stock. So he told me that he bought this stock on 6th of October 2023. So if you notice here, this is 6th of October 2023. I will mark it with an arrow. I will zoom in. Okay. That is 6th of October 2023. Look what happened after that. Now this is till 28th of March, 27th of March. So as per the SEBI regulations, this is 3 months old. So we can discuss this chart. But after this, if you notice the price action, the stock has started to recover. But I'm showing you this chart because this is called emotional pain. When you buy here and when you see your stock doing like this and you are still not selling in spite of the fact that the stock entered stage 4 on, you see here, stock entered stage 4 on 18th April 2024. That is when the 50-day moving average went below the 150-day and the 150-day went below the 200-day. I have marked it here. It is strictly not stage 4 because in stage 4, even the price is below the 50-day. Okay. So that happened somewhere here. So here the price also went below the 50-day. The 50-day was below 150 and the 150 was below 200. That's a classic stage 4 stock, which is exactly the reverse of stage 2, and it continues to collapse. So let's go here 6th October 2023 to understand what mistakes were made and how those mistakes could have been avoided. So once you have this knowledge, you will not repeat that mistake when you are trading. And by the way, this is for traders, for swing and positional. This is not for investors. Investing is a different game. In investing, if you like a company, you might also want to buy a company here. You don't look at stage 3, stage 4, whatever. You don't look at moving averages as an investor. But for a swing trader and a positional trader, the chart matters. So let's go here. Let's see. The stock was doing well, and this is where he bought the stock. I would say this was the most inopportune time to buy the stock. We pull this down. Okay. This was the most inopportune time to buy the stock because you look at the closing price of that day. It is 91.40. You look here, is 91.40. And what's the blue line on that day? You look here, it is 91.53. So the blue line is 91.53. The closing price is 91.40. So which means the closing is below the 50-day simple moving average. You must have heard me say this a million times on my channel that anything below the 50-day simple moving average, we don't want to get involved with those stocks. In fact, in our evergreen filter, this is our key criteria. The price has to be above the 50-day simple moving average. It doesn't matter whether it's a swing trading candidate or a positional trading candidate. If it closes below the 50-day, we are in the danger zone. That is the time when my student bought this stock. At that time, he was not aware of the system. So I do not blame him for this mistake. He was just doing things based on knowledge that he had at that time. He contacted me in somewhere in 2024. This was in October 2023. So at that time, he did not have this knowledge about the moving averages and how to read charts. But let me highlight the mistakes that he made. If he had had the knowledge, he would never have bought the stock here. That is the value of education. So when I say that enroll in my video course, well, that video course will, save you a lot of your learning time. Sometimes it takes us 2 to 3 years to learn a system. But when you enroll in a video course, when you pay, you learn that system quickly. And moreover, you understand what I am discussing very quickly. You start to connect the dots in your mind very quickly. So there is definitely value in education. I myself have spent so much of my money learning from others, taking video courses, reading books, attending seminars, workshops. We have to do all of that. We have to go through that journey. That is the value of education. Otherwise, the market will teach you lessons that you will never forget. Okay. Coming back to this. So, number one, he should not have bought the stock because it was closing below the 50-day simple moving average. He should have realized that. Second, look at the volume on that day. Weak volume. We have never bought a stock which is showing weak volume on a particular day. We have to buy high volume breakouts. Then, if you look at the number of points in the base before this candle, let me draw it for you. So this is point 1, this is point 2, this is point 3, and this is point 4, point 5. So before this day, there were 4 points in the base. So point 3 becomes the buy point. So this is ideally the buy point. As a positional trader, you will have to wait for the price to reach this yellow line, breach that yellow line on high volume, and as it is moving up, you get into the stock. The reason why we do that is because we need two types of confirmations. We need price confirmation and volume confirmation. In this case, there was none. The price is nowhere near the yellow line and it is closing below 50. Both are red flags. Third red flag is poor volume. Again, I repeat, this is for positional traders. This is not for investors. An investor can buy the stock anywhere because an investor will have time horizon of 5 years, 10 years, 20 years. It doesn't matter where the moving averages are. But strictly as a positional trader, if you end up buying a stock like this in this place, you are making a mistake. That's a professional error. You do not understand what you are doing. Okay. So I'm highlighting those mistakes that a professional trader could end up doing. Sorry, a positional trader could end up doing. So no price confirmation, no volume confirmation, and the price breaking below the 50-day simple moving average, which is generally a full exit signal, right? Then comes base counting. I'm not even doing base counting here, but probably this stock looks extended. See, in a very short period of time, the stock went from 54 to 98, almost doubled in just 3-4 months. So probably the stock might be extended there. I have not looked at the base count. You have to check the base count. I'm talking technicals here. I'm not even looking at fundamentals. What if the fundamentals of this stock at this level are poor? That is another reason not to enter the stock. So you have to do liquidity analysis. At this point, the liquidity doesn't seem to be a problem because this stock has millions of shares being traded. It's not a penny stock. See, there's a 26 million shares traded, average volume of 45 million shares, and it's not a penny stock. So liquidity looks fine. Comparatively, comparative analysis, well, you have to check the relative strength, the industry group rank, the accumulation distribution rating, industry leadership, and the improvement in industry group rank. Once you look at all those factors, then this stock initially qualifies. I have not looked at them, but I encourage you to look at them before you decide to get involved with the stock. Then you come to technicals, liquidity analysis, comparative analysis, and then you come to technicals. In technicals, you look at relative strength of the stock. You wait for the stock to touch the yellow line. You wait for a high volume breakout. You wait for the base to complete. You wait for an early stage base count, and then you get an entry. Plus, you look at the fundamentals to determine whether it's a swing stock or a positional stock. We have 12 fundamental criteria which we have discussed in the positional stock trading series. If this stock meets 7 out of 12 of those criteria, then it's a candidate for a positional trade. Otherwise, it's by default a candidate for a swing trade. So you do liquidity analysis, you do comparative analysis, you do technical analysis, you do fundamental analysis, and then you look at market analysis. Check what is the market condition before you buy the stock. That will help you understand what position size you should take. Once you decide the position size that you want to take, then you go into what is called as trade execution. Once the stock hits the yellow line, execute the trade, put a stop loss to manage the risk, and then manage the trade. These are the things, very, very simple steps. This is not rocket science. Have a look at my orange trading system. Right, there is a link in the description where you can download that framework. Just print it out, laminate it, keep it in front of your desk somewhere so that every time you look at a stock, you know, okay, I have to do liquidity analysis, comparative, technical, fundamental market before I take a position. And if a stock does not meet your criteria, just stay away, don't do anything. Sometimes there could be 2 weeks, 3 weeks, 4 weeks, 5 weeks where you don't find a single stock. Right? Don't do anything. You don't have to be invested in the market. If the market is getting weaker and weaker, you don't have to force yourself to take a trade. Let the stock come to you. You don't chase the stock. You chase the stock, you lose money. You lose patience, you lose money. Look what happened here. If I zoom out, see the ride is over. Okay, this is the most inopportune time to buy the stock. Look what happened. It's a complete disaster. 10 lakh rupees invested here would have easily become like 5 lakhs by the time it reached here. Right? That's a problem. That is a problem when you don't have education. You end up doing things like that. At least, if not here, you should have got out at least here. Any break below 200-day simple moving average, it is even not even for investors, it is good, right? It's the break below the 200-day simple moving average. If you don't even have the basic knowledge to exit when it breaks the 200-day simple moving average, you need education. You need training, right? This was an exit point. This was definitely an exit point because it broke the 200-day simple moving average. Then ever since the stock went into stage 4 in April 2024, it continued to be there till April 2025. For an entire year, the stock was in a stage 4 confirmed downtrend. Stage 2 is a confirmed uptrend. Stage 4 is a confirmed downtrend. Look what happens in stage 4. It's a complete collapse. It's a complete disaster, right? Another thing I want you to notice is sometimes what happens is between two bars, there is a window which you cannot observe. Now, I'm not sure whether there is a window here. The high of this candle is 93.50. The low of this candle is 93.55. So you see there is a gap, 0.05 price. There is a gap here. That's a window. A falling window is a very dangerous signal. Okay, a falling window means it could act as a resistance. So there is a falling window here. There is a falling window between these two bars. There is a falling window between these two bars. Then if you continue to go forward, there is a falling window here. There is a falling window here. There is a falling window here. So a strong confirmed stage 2 uptrending stock will never create falling windows. It will most likely create rising windows because it is going up. Okay. This stock is a disaster. You should have understood that. David Ryan calls this a serial gapper. Serial gapper means it continues to create multiple falling windows. It continues to become weaker and weaker and weaker. So basically, what is happening here is the reason why the stock continues to fall is that whenever the stock tries to recover, it falls. Again, it tries to recover, it falls. Again, it tries to recover, it falls. That's overhead supply. There are so many people stuck in the stock, like people who bought here, people who bought here, people who bought here. There are so many people stuck in the stock that whenever it tries to go up, these are the people who are trying to exit the stock with taking a little bit of pain because they don't want to incur further losses. That is a problem with the stage 4 stock. You need extraordinary volume for that stock to pick up, and that process takes a lot of time. For this stock to reach here, it is going to take a lot of volume, a lot of energy. And somebody like William O'Neill would only consider the stock after from here it has reached here. Only then would somebody like William O'Neill begin to seriously think about that stock. Otherwise, he wouldn't even look at this stock. The chart tells you everything. The chart tells you the story. By the way, IDFC First Bank is a very good bank. I personally have an account with IDFC First Bank. I can tell you my experience with their mobile application has been incredible till now. I think they have the best mobile application in India, at least. I have account in other banks as well. I used mobile applications of other banks as well. But this is extraordinary. I have never seen a user interface like this. They are a fantastic. They have designed it extremely well, and I think they have received some awards as well. Even if you ask ChatGPT which bank is the best bank when it comes to mobile banking or mobile application or user interface or user design, IDFC First Bank name will come up. Okay, so there's nothing wrong with the bank. Everything is okay, but there's some reason that investors have been selling. Investors have not been interested, at least during this period. They were selling the stock. So they saw some problem. I don't know what the problem was. I don't go into the details. I don't have time as a professional trader to read annual report worth last 5 years, 10 years. I don't want to do that. This just tells me that the stock has closed below the 50-day simple moving average. That's a danger signal. No need to look at the fundamentals. Why would I look at the fundamentals when the technically itself the stock is poor? What will I do by reading the balance sheet? On 6th October itself, the stock gave a sell signal. Look what happened. Right now, this is good for futures, guys. Now, I mean, people who take short positions in the futures market. If you have money, these kind of events are good for a short futures positions trader, right? Because this kind of event, then this kind of event, the stock entering into stage 2, bouncing back to 200, bouncing back down from 200. These are the events that will attract a short seller in the futures market. But not us. We are not into futures and options. We are uh, clean, old school cash segment operators, right? We are we look at the stock, we determine whether it's a swing trade, positional trade. We are small retail traders. We don't buy shares worth millions of dollars. Okay, we buy a few shares here and there, but we do that with analysis. We do that with education, right? We don't buy randomly any stock. That's why I wanted to discuss this with you. I wanted to give you this example so that you understand the value of education. Another student I had who contacted me said that I have 65 stocks in my portfolio. What should I do? Well, the first thing I told him that I don't give stock market advice. I'm not allowed to do that. I'm not in the advisory business. I provide education. But I also told him that, see, I am a positional trader, swing trader, right? If a stock breaks the 50-day simple moving average, right, that's a danger sign for us. So as he educated himself, he understood the importance of the break of the 50-day simple moving average. So when you have that education, you can take decisions on your portfolio. If I have got 65 stocks in my portfolio, the first thing I want to look at is how many stocks are trading below the 50-day simple moving average, right? How many stocks have broken their 50-day? How many stocks have broken their 200-day? If I want to follow this particular system. But those same stocks, if I have researched well enough and I want to stay invested in the business for next 20 years or 10 years, that's a different story. That's an investment. There, I don't want to look at moving averages, right? So that's what I wanted to discuss with you. The stock market could turn out to be a disaster for you if you don't have proper education, if you don't know what you are doing. You have to decide whether you are a trader or an investor. If you are an investor, don't even look at the charts. Okay, but if you are a trader, you have to look at the charts. Warren Buffett does not look at charts, right? He's an investor, he's a value investor. William O'Neill, Mark Minervini look at charts because they understand the value of moving averages, price, action, and volume. Take care.